Welcome to CARE Conversations with Clarity Financial Solutions, where through education, we move you from confusion to clarity on all topics touching retirement. Join us as we learn and grow from others' experience on entering into the next phase of life with peace of mind and conviction that you have a team of experts to help you, educate you, and let you know your unique retirement is upon you. So it's time to take a deep inhale, a slow exhale, and walk into this next phase of life confident and with clarity. Welcome, family out there, Clarity family. We are excited today to continue the conversation about one of the confusing topics that touch retirement, which is Social Security. There's a lot of confusion around its solvency, how it's calculated, all the things, right? And we talked a little bit about it in the last episode. In this episode, I have a specialist, Hamilton Morales, that works with Financial Independence Group, and he travels all over the country talking to advisors and to their clients about Social Security and why it's so imperative that people that work in finance understand Social Security benefits. So welcome. Thank you for joining us.
Thanks, Amanda. Glad to be here.
I love the background. We'll be met. I've got a Christmas tree in the corner and you've got a beach in the back.
You know, I could have gone Christmas, but being December, I figured, hey, I think everybody would like to be at the beach and kicking it, by the water.
Absolutely. They have Christmas trees there too. I'm positive.
Yes, they do. Yes. They may look a little different, but I think they do.
So tell us a little bit about what you do specifically for Financial Independence Group.
Yes. So actually, I've been in the financial industry since November of 2001, and probably about 10 or so years ago, our owners here came to me and said, hey, we see there's a big void with Social Security, understanding that for our advisors, and we'd really like to have somebody that was an expert in that, where the people that we work with, advisors across the country, have an outlet to go to get questions answered as it relates to Social Security. Because where else are you going to go? Are you going to call Social Security? I mean, I don't know if you've heard horror stories, but I can tell you a lot of horror stories where people have called 4 different times and got 4 different answers. So, having somebody that an advisor can go to get questions answered and to really help their clients walk through what we know of as Social Security, because there's so many different facets to it. Different parts, of your life need different things, and they can all be different, and needless to say, very confusing.
Yeah, 100%. I often remind people that the people that work at Social Security are hourly employees that are by law not able to give advice.
Even though sometimes they do.
Even so, sometimes they do. Mm-hmm. So you're supposed to have this topic of Social Security that you're brand new to. The only thing you know is that you get this thing in the mail that has an amount, and you are like, well, give it to me. And you go in, you're supposed to know exactly what to ask, how to ask it, all the things, what form to use, right? It's interesting that the owners there, or the leadership at Financial Independence Group, came to you. My mentor in the business when I was coming up through, after I became series licensed, said, you need to specialize in Social Security. It is a confusing topic and it will add value. And I just started pouring into it. I got my NSSA designation, National Social Security Advisor, and then also my RSSA, and just constantly am wanting to learn more, because it does have so many people just scratching their head or getting around a water cooler at work saying, get yours while you can, right? It's not going to be there for you if you wait, and they don't know that they're going to be penalized later. So I wanted to ask you a little bit about that topic specifically. So word on the street, right? Mm-hmm. Nikki Haley, for instance, was talking about it during when she was running for president, and people didn't like what she had to say about Social Security, and she was being honest. Right. Ultimately, we do have this problem, right? And we need to pull it out from the dark into the light and talk through it. So tell us what you're hearing.
Yeah. So real quick, fun fact, you said you have the NSSA designation. I actually used to teach that class. And I went with Mark and Jim and actually worked with a company to get that accredited. So very obviously I'm in SSA as well, but very, very familiar with the National Social Security Advisor. So, but to answer your question, yes. Oh my gosh, there's so much there. This is not something new. This is not something that just came up in the last 10 years or so. This is something that's been around and we've been dealing with and known that we were going to have to deal with for decades upon decades. And of course, just like all politicians do, they're going to kick the can down the road because quite honestly, Social Security having to deal with that is political suicide. And what's the number one goal of a politician? It's to get reelected. Yeah, they want to get reelected. And so in order to do that, they want to stay away from Social Security. But sooner or later, they're going to have to deal with it. And we're coming up to that. And so the OASDA does a report every single year, and they look at the health of four things. They look at Social Security benefits, Social Security disability, Medicare, and Medicaid. And this report comes out the following year, typically around May, June. And so for 2023, it just came out in May, June of this past year. And it doesn't change very much. It might change a year or a few cents. But basically it's saying that if nothing changes, we continue on the path that we're going, we make no changes, that by 2035, there'll be enough money coming in with Social Security taxes, that's the FICA taxes that we pay when we work, to pay roughly 82 cents on the dollar. Okay. Now, do I believe this is going to happen? No, I do not believe this is going to happen. Will there be some pretty big changes? I think there needs to be some big changes. Now, of course, unless your head's been in the sand recently, we just had an election. And so, there's some things that have been said as it relates to Social Security and ways to fix it. In fact, I just read an article. An advisor sent me an article, and he wanted to get my 2 cents on it. And one of them, of course, has to do with taxation on Social Security benefits. That's the individuals, the retirees that have filed for Social Security. Their provisional income is over an amount. Therefore, 50 to 85% of their benefits are taxable based off of the tax bracket that they're at for that year. And of course, President-elect has said that he wants to get rid of taxes on Social Security benefits. And I'm in big favor of this. And here's the reason why. It has nothing to do with the viability of Social Security. The taxes on Social Security benefits do not go back to Social Security. They go to the IRS, therefore it goes to the government to fund the government and their spending, right? So that's a whole another issue there. So it has nothing to do with Social Security. It has everything to do with having more money coming into the coffers to spend. So I am in big favor of them eliminating, especially if they do what they say they're going to do in making a lean and efficient government and lower spending. We don't need that extra money coming from Social Security benefits. Now, on top of that, of course, we have to deal with, well, how are they going to fix it? What are the things that they're going to do? And the article that I read, President-elect said that one way he's going to do it, and he didn't go into details in this, but basically by increasing our natural resource, so basically drilling, and then what we're able to do as far as becoming energy independent and selling that to other countries. What does that do? When we sell something, that means we get something in return. That's typically money, and therefore that money can help fund Social Security. So that's one thing I'd never heard of before. So that sounds great. Don't know how it would look, but it's something to consider. Other things that are on the table, and the one that I think makes the most sense at this point is eliminating the ceiling for paying into Social Security. So when you're working, again, you have these FICA taxes where you're paying into Social Security, but you only do that up to a certain amount of income. And so for 2025,
I think it's like 144.
it actually is going up to 176,100. So it does go up every year, which is great. So any income that you make in that year over 176,100, you do not pay into Social Security. Well, in my opinion, why don't we just eliminate that? Whether you're making 50,000 a year, 500,000 a year, a million a year, you're always paying into Social Security. Now, there's always caveats to this.
Right.
So one of those caveats is, well, if you've got higher wage earners paying more into Social Security, that means that their benefits are going to go exponentially higher because of that reason, given if we keep the same calculation. So they would have to adjust the calculation, not getting too much in the weeds, but we currently have 3 what they call bin points in their calculation. I think they would have to add probably 2 more to help level things out that way. But I think it's doable, and I think it's something. Would it 100% fix it? I don't know. The biggest issue is and not to put any onus on baby boomers, but that's the big issue right now. When Social Security came out, you had, for every one person on Social Security benefits, you had 42 people paying into it.
That's right.
Workers. Now we are at 3 to 1. And it's,
42 is more than 3.
Yeah. And so and a big part of that is because of the baby boomer generation. They are now retiring in droves, and they're getting on Social Security, and we don't have the amount of workers going into the system paying into Social Security as we have coming out and taking from Social Security. And that's the problem that we're having. And in not many years, we're going to be down to 2 to 1, then it's going to be a 1 to 1 ratio. And obviously it's not going to be viable at that point in time.
Yeah. I always have, when I was studying and, memorizing those calculations, the bin points, it was very obvious that higher wage earners get less of the benefit, right? So 90% of the first.
Well, they get, so if you look at what they get from Social Security percentage wise in comparison to what they were earning, their percentage is a lot lower than somebody who is a lower wage earner. They're getting a higher percentage of earnings paid into Social Security. So yes.
So when I was thinking about and I know this is complex, but that third bin point now isn't it 15%?
Anything that's left over, and I'd have to look at.
Okay. But I'm just wondering if they do increase the taxation or remove that ceiling, if they'll keep that smaller percentage or if they would increase it. But I guess only time will tell, right?
I think they would have to redo all the bin points. They would redo the first one, which is currently 90% of the first $1,174 of your AMI. And then the next one is 32% between 1,174 and 7,078. And then anything over and above that is a 15%. So they would have to change those to be able to add 2 more bin points, which obviously they could do. I mean, somebody had to figure this out, right?
Yeah, and it's so easy. Such an easy calculation. So just kidding. So another thing that I hear a lot are they're confused. They don't know how it's calculated, right? They think it's the highest, like last 10 years, right? And when I do seminars on this, and I'm like, no, it's the highest 35 years. And then on top of that, I don't know if you found this, but a lot of people haven't even reviewed their work record. So they've gone in and looked to see if there was errors or perhaps even zeros in their work record.
Yeah. So, I don't know when they switched everything over to where it's now all computerized. And so your errors are going to be very, very, very few and far in between. But there was a day where you had individuals doing this, therefore errors could be made. And so if people should go and look at their earnings history, and it's very simple to do. You just go to ssa.gov and click on My Social Security. You get registered, and then you go on there and you can pull not only your statement, but you scroll down a little bit further, and you could actually pull your earnings history that goes all the way back to when you first started paying into Social Security. And you could look at that and say, oh, wow, I'm showing a year, 1989. I know I worked that year, but it's showing I have zero, Now, the problem with that is the burden of proof is on you.
That's
And so that's going to be kind of difficult to go back unless you're one of those people that or you're a pack rat and you have everything going back 50 years. That's going to be tough to prove.
It is, but at least I think just the knowledge, right? So just having people understand that if their aim, average index monthly earnings, is the calculation of the high and average of the highest 35 years, that if there is errors, that's important. They need to at least know how that's calculated.
Yeah, the other piece of that puzzle is your highest 35 years of earnings paid into Social Security adjusted for inflation through age 59. Now, when I say that, people look at me real funny because I give these seminars and I go through this and they look at me like, wait, did I hear you correctly? You said through 59. So does that mean if I work past 59, they don't count? No, that's not what I'm saying. What I'm saying is if you do work past age 59, all those earnings, let's say in your 60s, they still count as your highest 35 years.
Right.
They just don't adjust those for inflation.
Right.
So they only do it through age 59. And that's even if you're, let's say you're 68, you're taking Social Security benefits and you're still working. Well, they still calculate it every single year and they look at your highest 35 years of earnings. And so if your age 68 earnings takes out the lowest of your highest 35 years, they're going to take that out. They're going to recalculate it and you're going to see an increase in your benefit. It's not a lot, but you'll see an increase in your benefit on top of your cost of living adjustments.
And that's a huge point right there. When I see people all the time and we're doing a holistic plan. So we're looking at their full retirement age amount or their PIA, primary insurance amount. We went over all this last episode. I gave people a good primer. I don't know if they remember, but that amount, right? So whatever that is, I always encourage people, do not look at that number, multiply it by 12 and then by 10, by 20, by 30.
Yeah.
That's what you got to do because that's when you really start taking your Social Security, time that you're going to elect it and start receiving it. You take it more seriously when you see that larger number. In last week's, we were talking about someone with a $2,000 benefit. 10 years, it would be over $250,000. 20 years, it would be over half, and then almost $1 million for 30 years. That's a lot of money. But when you see $1 million versus 2,000, it means more, right?
Absolutely.
Well, tell me a little bit, Hamilton, about the most important Social Security kind of maximization strategy that we see in the marketplace.
So I'm real careful when it comes to this because a lot of people, they're going to say, oh, well, you said this. I don't want to put people in a box. First and foremost, everybody's situation is different. Everybody's spending habits are different. Everybody's income needs are going to be different, and therefore everybody's when they need to turn on their benefits going to be different. Now, what I tell people, again, going back to my seminars, when I tell people, I say, look, I can show you how to maximize the benefit. In other words, I can show you based off of life expectancy when to turn it on to get the most out of Social Security. Now, there's one huge problem. I don't have a crystal ball. I have no idea when you're going to die, right? So I can only go based off of life expectancy, number one. Number two, just because I can show you how to maximize the benefit does not mean that is the best option for you in your particular situation. That might be where we start. And especially if we're talking about a husband and wife, right? So when we look at a husband and wife and we look at widows' benefits, we know that when one spouse passes away, the other spouse gets the higher of the two benefits. Okay, so our first step in putting a plan together is we want the higher of the two benefits, whoever that is, husband or the wife, we want them to wait till age 70 if they can. And the reason why we want to is not just for that person. Yeah, it benefits that person. But that benefit is going to last 2 lifetimes. And so it's important, especially now the statistics. What are the statistics now? It's if you've got a couple, they're 65 years of age, the chances of one of them getting to 90 or 95 is something crazy, like 45% or something like that. I mean, it's insane. So you've got to make sure that benefit is there for the surviving spouse and as high as possible. Now, that's where we start. Doesn't mean that's where we end up. Well, we got to have a place to start to put into the plan, and then we run those numbers based off of all the other criteria, inflation, spending needs, whatever the case may be, and say, okay, A, can they do this? And B, if they do this, how's this going to help them long term overall versus maybe taking it a little earlier?
Sure.
Type of a deal. And that's why you run the plans.
That's right. And you stress test it. So like when you're looking at some people with higher amounts of retirement assets or just savings, right? They might be able to pull from those accounts, keep them in a lower tax bracket, do some really cool Roth conversions, and then start Social Security later.
Yeah.
But if Social Security is going to be over 50% of your income, and that's a different story. You know, it all depends, like you said in the very beginning of this particular topic, it depends on you. On everyone's situation is different. Jokingly, I always tell people, all right, I'm ready to tell you about Social Security. So when are you going to die? And they're like, what are you talking about? I'm like, well, that's the only way I can tell you mathematically. Otherwise, we have to count on, really good information that we're getting about your life expectancy, familial history, things like that. It's current health status.
Absolutely.
And but then, like you said, too, are they going to continue to work? Do they really need it? How can we get this out of their head, which is get yours while you can. It's going to be okay. That's just I had a client, one of my very first clients that I had the aha moment of, I really need to understand Social Security. I met them when they were almost 70, but he had started Social Security at 62. While he was still working, didn't know. If someone told him at work that's what he should do, and he listened. His wife was a lower wage earner, so now his benefit is going to be the higher of the two, and he's locked into that lower benefit because he didn't have the money to pay it back when he found out it was too late.
Right.
So, just so many. It was like a domino after domino of a bad decision that just kept coming to bite them, but. I always feel like with new information, we make new decisions. And so that's why I really love these education kind of seminar topics of what is it? What's the foundation of it? And then how do I make an educated decision on my scenario?
That's the key.
Yeah.
Yeah. Yeah. And that's what I tell people is I'm not here to make you gurus of Social Security. I'm here to give you information that you need to know to help you make a good educated decision on what you should do as it relates to turning this on and when you want to do that. At the end of the day, it's your money. It's not mine. You've got to live with the consequences, both good and bad. And so I just want to make sure you have all the information to make a good, solid decision, whatever that decision may be.
Absolutely. And I'm so glad you do that, because not a lot of people think this is an interesting topic.
Well, it is very interesting. It's just very confusing because there is no one answer to everything or even one scenario. Again, we talk of spousal benefits, or widow's benefits. And
spouse. So previous spouse, right? So a lot of people don't even realize that they could draw off a previous spouse.
Yeah.
Marry and stuff.
It's just, and it's crazy. And it's like, well, what would the widow's benefit be? You know what my answer is? It depends.
Exactly.
It depends on how old you are. It depends on when they died. Did they turn their benefit on? Did they not turn their benefit on? Were they under full retirement age? Were they over full retirement? I mean, there's so many factors. I can't just give a broad answer because it's going to change depending on what the actual situation is.
Well, I would say too, one of my favorite things to do is give people a raise. It's a great way to win friends and influence people. But
Absolutely.
when I have clients in here and let's say they didn't realize that one of them was eligible for a spousal boost or that's additional benefit, and when I'm doing fact finding and we're just uncovering kind of just the basics of their spending, income, expenses, etc. So I'll ask what Social Security benefit is. I find out one of them has a $3,000 benefit and the other has a $500 benefit.
Mm-hmm.
This is pause. I guess we pause, right? So they're like, why are you looking at us like that? Has anyone ever told you that you might, I never say you're eligible, but you might be eligible for a spousal boost?
Yeah.
What does that mean? And then we call together sometimes, if depending on the wait the whole time.
Yes.
When they get an increase of, let's just say,
$5,000, $500, whatever. Yeah.
they are all of a sudden so happy they met.
Oh, heck yeah. Heck yeah. And this was bigger back before the Bipartisan Budget Act of 2015, where this was a bigger issue because you had to request the spousal boost, whereas now it's deemed filing. So once you become eligible for it, it automatically happens. Of course, I always tell people, don't wait for it to automatically happen. We're dealing with the government here. So now it may eventually get there, but do you want to wait 3-4 months before you get it? No, let's go ahead and call them and get the things into motion. But you're absolutely right. And we have some older people. In fact, I talked to an advisor. This lady was in her, mid to late 70s, maybe even 80. I can't remember. And she had a very low benefit and her husband had a much higher benefit. Well, they had filed and done all that stuff way before this deemed filing thing happened.
Exactly.
And so here it is. I'm like, I think you might be eligible. We need to call and find out. And sure enough, she was eligible, but because again, it was before all the deemed filing stuff, it never got done.
Right.
Never got done. Yeah.
Right. So I think, and other people will hear, well, I'm going to start my benefit. I'm going to start. No, they think that they can still do file and suspend and stuff like that.
Yeah. Yeah.
And they will, well, my friend did it. Well, the laws changed.
Yeah.
Yes.
Well, and here's the other piece of that puzzle, right? So file and suspend still exists. It just doesn't exist the way we liked to use it back before April 2016 when it officially changed. The only reason why somebody would do it today is if they turned on their benefit early and then said, gosh, I should have never done that. And they hit full retirement age and they're like, well, I really don't need the money right now. I'm going back to work or got a huge inheritance or whatever. So they can suspend their benefit at that point in time and get the 8% delayed retirement credits. The issue is that if you have somebody getting a benefit off of your work record, let's say a spouse, once you suspend your benefit, their benefit, the spousal benefit's also suspended. So that eliminates what we used to do with that back with the file and suspend days. And of course, restricted application is long, long gone now.
Yeah. Yeah. Well, I just really appreciate your knowledge and your commitment to continue to keep up with a very changing landscape, we'll say, in the future. But, it is so important as a holistic advisor not to silo your Social Security, but to really bring it into the full plan and look at all aspects of income and expenses and all the things. And like you said, individualized planning. I mean, that's ultimately.
That is the absolute key right there. Everybody's situation is different. Everything about them is different. And so that's why you have to have an individual plan. And Social Security is a big piece of the puzzle in income planning once you retire.
That's right. Especially when you start to calculate it, like I said, not that monthly amount, but times 12, times 20, whatever.
Yep.
That is lifetime income that you cannot outlive.
Right.
And it's really important. So thank you, Hamilton. I appreciate your time and, like I said, your willingness to really kind of give us a peek behind the curtain of things that you see.
Problem. Unfortunately, it was only 30 minutes, but you can certainly do it again any other time.
right. That's right. Well, thank you. Join our Clarity Financial Solutions family, where through education and others' experience, we empower you to make retirement choices with confidence. Follow us on Instagram or Facebook, or head on over to our website and sign up for our newsletter. If you'd like to further engage with us, please don't hesitate. Just reach out, 864-987-8729. See you next time on Care Conversations with Clarity.